Good morning, everyone, and welcome to the European crossover webinar. And we're seeing the euro come back after just taking out the 113 area, and we'll take a look at this. We've mentioned here the euro's initial bullish move past the ECB faded through the key 1340 level. And we'll take a look at that, and which is now resistance for the 1340. But we came down towards that 1291, which is a 78% of the 1215 to 1369, with the daily support level closing support at 1286. We'll go on and take a look at this here. We had a nice move after the ECB. Now, when you looked at what we were calling reality, was that this market would move lower, but Draghi did his best to support the euro. The one thing that was really, when you think about it, was kind of weighing against the euro as it moved higher, and we referenced that, was look at the Bund. Look at this huge move in the Bunds, and certainly when you see the Bunds yields move lower like this, it's going to go on and weigh on the euro. We saw the euro then turn around, basically followed in an inverse relationship the way the Bunds were moving, and we saw these Bunds continue to move past here, eventually even get past the 165. And as I was mentioning to some people, was that as you go further and further into the session, you generally see this squeeze just keep on going and going as everybody's basically ratcheted out or squeeze right on out. And then finally today we're giving a little bit back, which is coming markedly with the same move in the euro as the euro comes back high, a little bit higher as the euro, the Bund pulls back. But we come down here to the 1291. This is a level that we're looking at, or actually at the beginning of the week when we had actually closed below this trend line, and that was going to be resistance. But the key level we're talking about now, which would be resistance, is going to be now 1340, and you can see the importance of the 1286 here on the lower move here. We've also seen a very nice move here on the cable and really on all the sterling pairs. You can see this make this run up here, and that was on actually a story that Blake had actually noted. I was seeing the cable move higher, and I was looking across my Reuters headlines. I didn't see anything, but Blake had noted I think it was the Sun report, and we'll take a look at that on the morning bid. Does say a speech by the Queen to a women's institute meeting in Norfolk urging people to come together has been universally interpreted by local media as a coded plea for the country's potential class to find a way out of the Brexit impasse. The comment is unlikely by itself to resonate much beyond today's headlines, but it does reflect the growing anxiety over a stalemate, which, if unresolved, would send Britain spinning out of the European Union without a safety net. Finance Minister Philip Harman, meanwhile, has strayed substantially off message to tell a Davos audience that no deal Brexit would be a betrayal of the 2016 referendum. The assertion, using the emotive phrase usually heard from hardline Brexiters fearful of no Brexit, sits uneasily with PM Theresa May's insistence that the no deal cannot be ruled out. Separately, there is speculation that the Northern Irish DUP would fall behind May's deal if agreement could be found on a time limit to the Irish backstop. Something the EU has ruled out for now, but which might gain traction if it becomes the one thing that could break the deadlock. Germany's closely watched IFO index on business morale is due out shortly, and I do see here that actually came in a bit weaker. We'll take a look here. So it's down 1.5. The prior was 101. They're looking for a Reuters pull of 100.6, and we actually came in at 99.10. So you can see here that the woes continue on the economic data for the region. So it said with economists expecting a fall for the 5th month in a row for January, certainly that is what came to be. That comes after the ECB, Mario Draghi, acknowledged yesterday that weaker growth was on its way away for the Eurozone as a whole, and a point underlined by a major package of polls published by Reuters today. The top line conclusion, a synchronized global slowdown is already underway, and any escalation of the U.S.-China trade war will trigger an even sharper downturn. Well, Draghi made his point that he saw that that wasn't going to happen and that they're going to find a way out of it. And boy, I never saw Draghi put such a positive spin on data and circumstances across the board. It does say Italy's verbal attacks on Francois Macron's specifically and the European Union in general are getting more vitriolic as we approach May's European parliamentary elections. Now, Prime Minister Giuseppe Conte is quoted as saying that the French and Germany are making fun of Italy and the rest of the EU with their Aachen Treaty signed this week, pledging to work to give Germany a permanent seat at the United Nations. There's a serious point here. Although few people think that the reform of the UN Security Council is going to happen anytime soon, it wasn't too long ago that the thinking in Brussels was that it will make sense for the EU as a whole to have a permanent UNSC seat rather than just Britain and France. The argument, which has a certain logic to it, has that the EU is, after all, seeking to have a common foreign and security policy. And we'll wrap up quickly. The Australian dollar heads for a weekly loss, and the New Zealand dollar fares better. The Australian dollar was on the defensive on Friday at the end of the tough week as concerns swirled over the Sino-U.S. trade talks and global growth, which investors also pondered the possibility of rate cuts at home. The Aussie dollar was pinned at 70.86, having been as low as 70.77 at one stage. Senator took a knock when U.S. Commerce Secretary Wilbur Ross said the United States and China were miles away from resolving trade issues. Well, you get these mixed messages from the administration. I saw one that I forgot what administration official was saying they really want a deal. And now he says they're miles away. So it's administration that, one hand does one thing, the other hand does another. 30-member Chinese delegation plans to come to Washington next week for talks as the world's two largest economies trying to meet a March 1st deadline to resolve their trade disputes. The Aussie had already been under the fire after the National Australian Bank became the last of the four major to hike its variable mortgage rates, fueling the speculation the RBA might have to ease to counter the private sector tightening in financial conditions. That was seen as a body blow as an already reeling housing market investors to narrow the odds on the reduction of the 1.5% cash rate. Given the shift in risk sentiment over the past couple of months, the local rate market is correctly concluding that it's worth spending a few basis points to hedge against a move. Sean King at Triple Consulting said, "Our expectation is the RBA will resist cutting for as long as possible. We think the most likely time will be at the November board meeting. The RBA is hardly alone in its facing pressure." Went on to mention about Draghi. The read was much that previously posted rate after the summer now looks like a very distant prospect. It's also worried to central banks assert that the risk of recession is low. And as far as the New Zealand, got to lift the week when the domestic inflation proved to be firmer than bears expected in the December quarter. Government bonds benefited from the angst over the trade and global growth. And in reference to that with the Aussie, we had actually, remember, if you mentioned it, remember at the beginning of the week, we had referenced that rounding top that I posted on the 2-hour chart. So it says the 2-hour rounding top posted at the beginning of the week should find support around 72.43, confluencing with 70.47, actually should be 72.47, the 38%. And I'll show that to you here on that 2-hour chart. Here's that rounding chart that we were talking about here. So you can see here the 70.43 confluence with 70.47 here at the 38%. And we posted this at the beginning of the week showing this, and it's not too often you see a rounding top, and we've since seen the Aussie continue to come a little bit under pressure. But what we're looking for is potentially a move down here to 70.43, and that's confluence with 70.47 to 38% of this entire move. And sterling reaches an 11-week peak on May's hopes for a new Brexit plan. Sterling scaled an 11-week high on Friday after the Sun reported that Northern Ireland's Democratic Unionist Party has privately decided to offer conditional backing for the Prime Minister May's Brexit deal next week. The pound has climbed about 1.8% this week, moving above the key psychological level of 130. The Sun report pushed the pound 0.4 higher at 131.14. If this report is true, I expect sterling to rally to 132 versus $1, said Michael McCarthy with CMC Markets. The euro gained to 113.21, Although longer-term prospects look bleak for the single currency, on Thursday, the ECB provided the latest warning about Europe's dimming outlook. Analysts expect the euro to underperform the peers in the near term as monetary policy expected to remain accommodative. Global growth concerns that kept broader risk appetites in check in currency markets over the past few weeks. Market participants have been increasingly concerned over the U.S. trade tensions. Well, that's no news. The dollar is facing a tough year ahead as growth at home and globally becomes under pressure, and the Federal Reserve comes closer to pressing the pause button on its steady rate hike cycle. Against the yen, the dollar gained to 109.80 despite weakening global sentiment. Japanese investors have been net buyers of foreign bonds, and analysts think this could be one reason for the yen's underperformance. And lastly, we'll wrap up. The ECB committed to keeping rates low. Villeroy. The ECB is committed to keeping interest rate low as it winds down its monetary stimulus and could consider offering credit to banks, ECB policymaker Francois Villeroy said on Friday. However, slowing growth across the region has raised questions about whether the ECB will be able to raise interest rates this year for the first time in a decade. We remain committed to maintaining interest rates very low, which is good for the economy, Villeroy told France 2 television from the World Economic Forum in Davos. Progressively, we're withdrawing monetary stimulus, but it's very progressive and depends on the improvement and in the economy. We'll take the time it takes. With the ECB already owning a quarter of the Eurozone's outstanding government debt, some analysts expect it to turn to other instruments to keep credit flowing, such as the new round of cheap multi-year loans to banks, known as a targeted long-term refinance operations, or what they refer to as TLTRO. We would consider the provision liquidity and credit to banks. It's part of our toolbox, Villeroy said later in an interview with Bloomberg TV. With TLTROs used by many economists as benefiting many Italian banks, Villeroy added that we cannot be designed for specific banks or jurisdictions. So with that, let's go on and move into the bias chart. Well, as I mentioned here, is this becomes a resistance right up here, right? This 1340, which was support on the way down, and we referenced that in the euro as the market moved higher. Well, we made this run up just now. It was at 13, I guess about 1334. Since pulled back a bit. Well, that's actually going to be resistance. We noted that in our Asian analysis would be resistance, which was support for the market. This will now be resistance. Now we'd already broken below this trend line here on the daily, and the market's having a tough time. Even when we tried to make that move high, well, we make it up into around 80s, and then we rotated lower, and as this market broke lower here, just continued to drift, and really that drift lower here in the euro was at the same time that the bunds were continuing to move higher and higher and higher, keeping that pressure on the euro. Really, we didn't even see a pullback in the euro. Once it got going, it just wouldn't even barely even make a move higher. Intraday, it just kept moving lower and lower. And got past the 1309. One of the things we're looking for in case we're able to trip past this 1309, and we certainly did, and made it right down here to the 78%, being the 1291. Since then, we've worked a little bit higher. As we look here on the 30-minute, though, with the exponential moving averages, we actually have shifted into a buy mode here. One of the things I looked at yesterday was, even though we saw this run up here right at around 80, we were still in the sell mode here, right there. And so once we, like I said, as the bunds continue to move higher, it was still in the sell mode. This was, did well on the move up here, but I gave it a chunk back as you continue to see this drift lower. It just was relentless. There was barely even a pullback before we were able to come down here and just keep on going lower. And we made it down here to that 78%, and now we've continued to work a little bit higher. And the momentum has started to change now here. We'll take a look at the dollar index shortly because these generally trade inversely to each other. But we're seeing, like I said, a little bit of an ease back, but 1340 is now the resistance. I guess on a intraday here, you could make the case this came right here at 1335 right here. Market actually just stopped almost came within half a pip. But our resistance is the key area, the 1340. And support now, we're actually going to keep the support here, which we already had before, the 1309. That'll be just a moment. There we go. So we're going to go and keep here, as I mentioned, 1340, and we'll keep the 1309, but it's interesting to see how eventually we would have expected us to reach this. We did reach it on ECB day, but probably would have expected it to get to this 1291, which this was actually our level that we were looking at the beginning of the week when we're doing the Asian analysis. We actually did make it, would have been thinking that we got here probably before the ECB or right when they're making that announcement. Draghi was so positive that it pushed the market higher, but you couldn't fight the pull of those buns. But let's go and move on now to the cable. Boy, what a move we had. Well, 3123 is the daily resistance. That's why I had that marked here. Let's go on and move on to the cable now. Well, we got that report from the Sun. Blake was the one that highlighted that in the chat. Like I said, I saw the cable moving up, and I was looking around finding, wow, this is a pretty decent move. Where's this move coming from? And I looked across my Reuters. I didn't see anything, but Blake had then posted the story about the Sun and the DUP. Let's go on and move into the cable. Well, we're easing back a little bit. And we'll take a look here. The 3123 I'd mentioned on a daily. And you can see where that comes right here. See right there? Actually right there. 31, it's actually 3124. So that's the daily close support that we had on our bias chart resistance here. And we'll keep that here. The only thing I didn't mark was the asterisk. So we'll keep that there. Now looking as far as the resistance, but boy, what a move that we've had here in the cable. Wondering if this is almost like a 261% move, but $38.8. So we'd even exceeded that area there, the 161%. Really quite the solid move. And, it kind of makes me think of what, what Blake was referencing early in the week is, it's just going to go on and, I want to say, really take its toll on shorts. And as we moved higher and higher, and I think it was what we saw in the report there, Michael McCarthy of CMC, he's looking for a move to 132. And I think Blake had referenced the same area too. And some good moves here. I've started to look at the cross rates because sometimes you don't see this kind of movement. One of the things that did bother me and why I'm starting now to look at the Euro Aussie. We'll start to do some work as I get a little bit more familiar with the market. I've always stuck pretty much to the majors. I have traded crosses, but not very often. Most recently, I dabbed around a few times with the Aussie yen, and really just pretty much just intraday. But one of the things I saw here was when I was looking at this. Hang on. We've seen this huge move here on the pound versus the Japanese yen. I was looking at it actually in the Asian session and looking at actually stepping in at the time. I thought, well, Yeah, I'm not even used to trading the pair weight, but I was looking at actually getting short there at 44.13. I didn't put it on. I came very, very close, but I was keeping an eye on it. But these moves here, some of these moves, and look at the pound versus the Australian dollar. Same thing. I was up in here, and we actually when we made that move up here, and the pound versus the Aussie, it was actually here. And I see that we had actually dipped in a little bit later on. I'd already gone to bed. We actually made another run a little bit higher up to 44.23 before easing back. But one of the things that, and I'll get back, I kind of lost my train of thought there. And I was looking at the euro versus the Aussie. And one of the things that had been frustrating for me was that when I was looking at the euro at the time, it was just, you can look at this move. The only thing that did kind of was a bit of a saving grace for me is when the euro came up here, and I did well all the way here, and then I jumped out. Well, the good thing that kept me from chasing it was because the exponential moving averages still had it on a sell. So that was a saving grace in the sense that it kept me from, chasing this market. And it actually made my first foray. I think it was right around 48, and then we rallied up a little bit hard. I was able to jump out, and then I ended up getting back in it, I believe it was, and then I pulled, added some. But the thing was, it's just there was not even a pullback. I mean, it was just the pullbacks were like, what was it, 7 pips or something? We just kept going lower and lower and lower. And one of the things was I like a good two-way market, which I do best. But if it's just, it was just a one-way train going this way and essentially a one-way train going back the other way, no give and take on the way back. But so I kind of jumped around, losing my train of thought. But one of the reasons I was starting to look now at the crosses for a little bit of that two-way action, it kind of reminded me when I was looking at that where the pound was versus the yen. But anyway, let's go on and move on to the resistance here. So resistance on a 2-hour close, it's going to be right there at 31.20. That's almost just basically a spit away from this key daily resistance, which is right here at 31.23. So, and I think I'm going to go market anyway, but because it's almost so close, I mean, it almost seems nonsensical, but we're going to put it right there. It's 31.20. And we'll just put the 23, and that's key if we were to close above that. Let's go in and take a look as far as support. Well, support, you can see that coming across here. Looking at 30.46, and we'll see if there's some type of a confluence there. Well, 30.28 would be the 23%. So if we do go on and pair back, it's going to be right there. 30.36 for today. 30.36 for support. We're still in the buy mode. You can see that in these exponential moving averages. And I use that on the 30-minute. Like I said, it was a saving grace for me for the euro yesterday because it kept me from chasing the euro higher. You can see it still remained on that sell mode. We've actually crossed over here into the buy mode on the 30-minute. But it was really frustrating yesterday to see this not even see a bit of a rally back. At least, 12, 15 pips, which are the kind of moves I like to do. It sounds a little bit silly, but for me, I like to jump and scalp around a lot. But it was just, almost relentless. It just wasn't a pullback. But anyway, let's go and move into the Aussie now. I still came up for the black, and it's one of the reasons I ended up jumping out at the end. I'm like, I'm not going to go on and just turn what was really a very, very good day into a poor day. So I was able to save my gains, but I gave a decent chunk on that relentless fallback in the euro. And why now I'm starting to kind of look at the cross rates to get this nice two-way action, which is the type of trading that I do well at. Anyway, let's go and move into the Aussie dollar. We had talked about it at the beginning of the week. I even posted that chart. I told you I'm posting a couple of charts, maybe 3 charts, depending on the volatility. You don't see a lot generally on Thursdays, so I posted 2 charts. But one of them was a 2-hour Aussie dollar. I shared this at the beginning of the week. When I actually at the time, I think I posted the daily chart, and I also posted the 2-hour chart. And what I posted was on this 2-hour, this rounded chart pattern, which generally you don't see very often. At least I don't think so. And we have continued to move lower. We've actually rolled even lower. You can see here is with this rounded top. I think we're going to end up coming down here to 70.43 before it's all said and done. Okay, 74.30.43 level. You can see that coming across here on the 2-hour chart, which would confluence with 70.47, which would be the 38% of this entire move. The flash crash low 67.46 on up to 72.34. So we're looking at support today. They've already come off quite a bit. Let's take a look here. Actually, we've come fairly low right here. Almost down here to the 70.73. Tell you what, we're going to go and still keep this as an immediate target, even though we've already come off quite a bit. We're going to go with this 70.43 as we start the beginning of next week. We actually had this as 70.66. They held up pretty well. They got as low as what? 70.76. We'll go with this 70.43. Upside here on the Aussie. There's that key 71.42 level here. I don't know that would roll back, but to keep an overall perspective, let's use this as our resistance, 71.42. So that will remain the same. It still remains in a bullish mode, even though, like I said, we've had, when you look on this rounded chart, and we are in a sell mode, but you know, you got to give this market its due. You come that far back, I don't know how you can say, oh, now it's bearish. I mean, yeah, you can look at it on a very short-term basis with the exponential moving averages. And generally, like I said, I just have these on here, but generally what I base mine off are the 30 minutes, although you can see here, as I guess this would have been a good one in the sense that it was a rounded top, and the rounded top, we're looking at over the course of a 2-hour chart. So when you look at the exponential moving average, even though we popped up here, it still remained on a sell mode. You can see here that these two lines kissed each other. So we're still in the sell mode, and obviously with that, the overall pattern being this rounded top, it kept itself in check here with this lower move. Let's go and move into the Kiwi. This isn't a market I pay much attention to. Some do, especially if they're doing the cross trade. But as it comes to the New Zealand versus the buck, not much of a market that I keep too much tabs on. We're looking at here on the resistance. Which should be right there at 68 cents. Be 68 cents. There it is at 68.03. One of the things we may do is, and like I said, I don't even follow this market very closely, is we may end up substituting this with one of the cross rates, whether it be the euro, maybe even the euro Aussie. It's not a market. This market is just not one. I know that although Blake did very, very well as far as the Kiwi versus the Canadian dollar, once again, a cross rate. And it's been we just don't see these kind of movements in the majors. And if you've been trading for a while, we used to see, God, my goodness, the euro used to be just it's not that it's not, but I'm just saying, as anyone who's traded the euro over time, you just don't see these back and forth movements we used to see. For a while, I think that the daily range, daily chart would sometimes be like, what was it, 125 or 138 pips. It kind of reduced before then, but you'd see this great, nice back and forth intraday movement. Just not something you see. It's as these markets have kind of changed somewhat, and why not? I think it's important now to probably start to look, at least for me. Some of y'all do trade them very often. The cross rates is something I'll be looking at. But maybe we may end up substituting the Euro Aussie instead of having to follow the Kiwi here. Looking at support, we're going to go here at 67.22. Actually, probably starting next week, unless anyone's opposed to that, we'll probably substitute the Euro Aussie in place of the Kiwi here. Let's now go on and move into the dollar CAD, and we've had a nice movement up, return back move up here in the dollar CAD. For the longer term, as most of y'all know, I like to focus on the 2-hour chart as opposed to the 4-hour chart. We'll keep it on here. Very nice little, and I wouldn't call this a long-legged doji, but a medium-legged doji. But it's one of my favorite candlesticks that I like. And once again, when you look at this, and this one isn't a long-legged doji. We actually looked at, I forgot which pair it was the other day that it worked out. And I said, oh, I'll tell you what it was, and I'll reference that back again. If you don't mind me pairing back onto that. Was the cable, and if you remember when we started out on the weekly chart, we had this somewhat long-legged doji here. And what I said was, we're going to have to, when you get this, what's the recent direction that's up? So you're going to have to, end up pairing back. And pairing back is exactly what we did, but which we did. We started out the week defensively. And although it didn't pull back that much, when we can revert back to the daily, you can see here that, we ended up pairing back, to go on and start the week. We did, but we were on a buy mode. We talked about that if you looked at you could clearly see the momentum. So to be buying the dips back, and we came pretty close to right here, which was this 28.20. But that's what I'm saying is one of the things I like about what I like to refer to as either a medium or a long-legged doji. You see the market saying going and pair back. Well, you saw that here, and it wasn't that long of a wick, so it wasn't. But when you look at that here, once again, and the wick isn't very long, but had we had a pretty good move? Yeah. And once again, bears don't have control, bulls don't have control. If you finish in the middle, it wasn't that long of a wick, but where we were, and when you look at it in perspective, makes some sense here. So you already rallied up here, and you're taking out these highs, and you kind of finish in the middle of nowhere. So generally, once again, what's the prevailing trend? Up. So where you're going to go, you're probably going to at least ease back. So if nothing else, at least it keeps you from chasing the market. But it's a nice move, and this happened to coincide at the time with us. And this had actually been our bias chart resistance for about 3 days, I think it was, the 33.66, which was a 38%. This market actually had the opportunity to even move a little bit higher, but we've since paired back. One of our support levels we were looking at, remember, that was been to 33.07. We had 33.14. We talked about that, but we said, hey, we'll give a little bit more room. Well, it's holding the 33.14, but our support was going to be 33.07. Until it's taken out, I don't see any reason to change that. See, here's our 33.07. We did expand this a little bit to take into consideration we'd already come up here, and could we push higher? We're looking at 33.88. The high was 33.75. We thought it could push a little bit higher up in here. You see right there? But it didn't quite make it to the 33.88. But we're going to keep everything in check for now. The only thing we'll do is we'll move this a little bit lower, right there, 33.60 on the bias chart. And still overall bearish. Let's go and move into the dollar Swiss. This market has really kept its own up in here. If you look at it on the daily, it has stayed up here. And the bias chart has remained the same. Actually, I think now for going on 3, if not 4 days. 99.88, 99.23. We did get the pullback, but it wasn't even as much as we even thought. And there's our 99.23 here. You can see right there where it came here. And look at this. This thing has just stayed up in here in the clouds. This is another market. Honestly, I've followed overall. Once again, I wouldn't mind substituting it with the cross rate. We do move here in this market, but it's this market that's another market that sometime back used to be a decent market back and forth, but you don't get a good sense of direction. And then it turns and look at it. It's just one way. And if you're on the right way, fine. But I'm just saying is you're not seeing that good intraday movement. And honestly, it's not the canary in the coal mine that it used to be. And I'll reference this to what I'm talking about. We've had some new traders come into the market, or not come to the market, but come into the chat room. And I always like to share a little bit of thing. One of the moves was, and I talked about this, if you look at the beginning of the year, this market really turned around. This was, and you can see it in March, this signaled when the dollar index, this actually led the dollar index out of the woods back to the move up in here. We had a very, very nice move here, and then this market turned around and rolled back. So this led the market out of the dollar index out of the, I used to say, let it out of the woods. And the dollar Swiss has always been a very good canary in the coal mine, meaning that you could kind of look at it to, is this move real in the dollar? Do we see some divergence? Wow, the dollar Swiss is starting to break down. There probably isn't much upside move in the dollar index now. It's not the canary in the gold mine that we've seen. So when you see this rally up in here, like, wow, it was confirming, it actually led the dollar index. And once we got here, you're thinking, okay, the dollar index isn't going to move much higher because the dollar Swiss seems to be incapable of moving higher. And while all this was happening, the dollar index was still continuing to move higher. And we hung around. We've come back down, but as I said, as we broke lower, now it just sits here. And if you're trying to trade this market, you're just not seeing the movement unless it's a market that you just want to hang on. Let's go back in here. So look at this. We're just not even moving here. And this, if you look at this chart, you probably think, oh, what are you looking at? A 15-minute bar chart? Not even a half hour. These are 2-hour bars. And you can see there's basically no movement here. And these are 2-hour bars. And we're trading in not even a 20 pip range. So it's another market that, may end up substituting for a cross rate to go and review. Because once again, this has actually been, I know for sure it's at least the third day in a row that we've kept the same exact bias chart. We're just not even moving here in this dollar Swissy. Let's go and move in now to the dollar yen. Well, we've hung around here. One of the things that we saw when we did our analysis, and as I told you, I've been posting some charts, in the Asian session. And what we had as our bias chart low, this is earlier in the week, I had 914. And we came down here to 914, but we turned around, we ripped right back up. And one of the things that I was looking at is when we made this move up here to 1002, I don't say arguing, my case in the chat room was, I was making the case, hey, look, I don't think when we're up here 1002, and actually I posted that here, that there was a level here, 1002. We actually didn't quite make it. It made a 10.002. But the thing was, I said, hey, look, you know, if you look at this move that we've made up in here, wow, what a move. And most everybody thought it was going to go on and roll back because we were talking about 923 being the bias pivot and so forth. And we moved, but we moved higher. We moved higher. So I thought, I don't think the market's in a position yet to, although the BOJ essentially flipped the script, for us to turn around and rally to a brand new leg. So I thought we'd end up pairing back. Well, we did pair back, not as much as I would have expected. I would have preferred the market to have come down here and at least near challenge at 914, and then I could believe this up move for potential another move up higher. As we covered this, when we were covering the news, it was saying, you know, people was kind of scratching their heads about the dollar yen, not the dollar yen, but the yen in general. And the thought was, a lot of Japanese investors are buying a lot of bonds, foreign bonds, and that's why the yen isn't as strong as it. Because most people remember this was actually supposed to be one of the trades of the year, which was the dollar yen and rolling back. And you know, I even had a target down here. So I think it was 686 when we were down here, and we rallied up. I thought, okay, this pivot, this 923 is really going to hold, and tried to initially, but we've worked higher. Now we are where we are here, and that almost backtracks us a couple of days. Can we see another leg up here? I don't know. I mean, but you can see here it's holding its own. But I just don't think there are enough people that have been able to jump on the train here. If we had, you know, rallied, you know, we came down here 914. If we'd come down here and taken this out and come down here to, let's say, the 908. 892, I'd say now we've come down here to pick up some people on the bus to get back to going long again. I just don't know if there's enough for another leg up here. Although, like I said, when people kind of looking around, they're saying, wow, how can the yen be so weak? And the prevailing thought right now is that we have investors, Japanese investors, buying a lot of bonds. Anyway, that being said, where's the resistance? I think when we looked on this market here, it was right up in here. There was a move before then, yeah, 1025 right here. And I think on a closing basis, it's almost like 1038. But we'll go with 1025 for our resistance in case they somehow push higher. I just don't know if that's enough to start a whole brand new leg. Doesn't mean we can't get to 1025, but to start a brand new leg, because once again, after this move, a lot of people, myself included, were going to be bearish. Okay, so we took the dip back, we moved right back up again and say, okay, look, if the market has now, because the BOJ flipping the script, are we ready for another move higher? Okay, fine, then come back down here to 893, pick up some new passengers from 893, and then we can make a move. We just haven't had the pullback. So I question whether there's a brand new extended leg. Can we make new highs? Yeah, I think so, but that's a possibility. But an extended leg, I don't know. But right now you can't argue the momentum. You can see it here, certainly higher. Support now would then be, let's take a look at this closer. On Fridays, I kind of like to encompass of what's happening over the week. So I might add a little bit more flavor or what I see. Like Fridays, we kind of look at how the week played out and maybe how the beginning of the week may start. But anyway, moving back on, we'll go with support coming in right there. Look, we have several touches coming in. That's going to be 942. So that'll be our support for the euro. Not euro, I mean the dollar yen. And let's move into the cash dollar index. Well, quite the move it was here yesterday. Obviously, a great portion of that having to do with what happened with the euro. This was for the umpteenth day in a row. You can talk about that being our support. Actually, now is considered our pivot, 9608, which actually was only an intraday pivot, and it continued to garner more and more strength or more validity, and now it's changed into an outright straight up pivot, and that pivot actually held, and we had a resistance at 51 yesterday. It looked like the market even had we've even posted there in the Asia analysis, hey, are we at the precipice? And unfortunately, I asked as a question, are we at the precipice of now a pullback? A lot of people were making the point that they thought the euro was really going to turn around. And I've got to give it to Draghi. He really made the case trying to support the euro, but when you looked at the realities of the situation, and I'll reference that quickly again, the bund, you can see, I don't know how you can be long then the euro, which scratched my head because that's where I was. I mean, on the way back down when this bund was moving higher and made you at least want to question whether that was the right move to going to do, being long the euro. We're seeing the euro just hanging right now at 13.25. We've come off of those lows. That 12.91 was actually a level we were looking at the beginning of the week, but we thought we'd probably hit that before we got to the ECB. Well, actually, we didn't hit it till post ECB after a good rally. But anyway, let's move on to the cash dollar index. So one of the things you even question about the cash dollar index, we're now looking like we'll start to change to a buy mode on the daily momentum. But you can see, even though we've broken above this downtrend line, the market was still having a tough time because it was still in a sell mode, but now we've made this move higher. 96.68, see 61%. Well, that's exactly what we came to. I wasn't paying that much attention to it right here. And we had 96.72 as a key daily level here, 96.72 right here on the cash dollar index. Well, for right now, we've been pushing up. Well, then we're going to go with this daily close level, 96.72. We've had this in place right here. You can see the closes right here. Then really the market vacillated on both sides, but this kept us high on this move here before it rotated. So that 72 is a key level. So we're going to use that as our bias chart support, at least for now. Doesn't mean we can't get above it, but that will be key on the daily close. Certainly bullish. Let's go move into the 2 hour. Well, there's the pivot we've been talking about, this 96.08. Support is going to come in right there, 96.23. You can see the touches coming across. So it's going to be 96.23 for intraday support. And we'll go move into gold. Well, I tell you what, you got to give gold its props. I mean, it was really under some pressure in light of what was happening with the ECB. But I think it also may have found some support with when you look at what was happening with the bunds. So you can see here, it's had every reason to break down, and it still hasn't broken down. I mean, we've eased back, but we could have easily triggered some stops and have easily reeled back to 1267 in light of what the dollar index was doing. And it's really holding its own here. We'll take a look at one of the things we've focused on, remember, has been the weekly closes. Last week was the first weekly close, which was negative from the prior week, but you can see we're still holding our own. That's what made the case why we kept saying there's still the potential for it to go higher, and people were so quick to write the epitaph on gold. And my case was, if you look at the weekly, and I'm not even a long-term person, but you can see here, higher, 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 higher. Finally, we broke lower, but you know what? We have every opportunity to come down to at least 1267, and we haven't done it, and the market's holding its own. So when we look at bias chart support for today, been a relatively quiet market to trade. I haven't done much in gold. I was trading pretty active for a while, and I just haven't done much, but there hasn't, you can see here, you get these little jerky moves here that don't even last very long. So we haven't seen this move. Once again, same thing. I like to get a two-way market. Gold has its interesting qualities if you get used to trading it, although I will say the action over the last, almost a month hasn't been the typical gold action where you generally see some nice moves here where they'll last, and you can get a pretty good feel on the momentum, and then within that range you kind of back and forth and you roll and test the lower side. You can see here for the last month or so we've had that undertone bid. There hasn't been a chance to really exit out of a market, and then the action other than this move here, which was very nice here, a little bit here, but we've just stayed in a real very tight range, and we break lower and then tight range, tight range, tight range, a little bit of fake, but we go right back. So it's been a tougher market to go on and trade. I haven't really done anything with it, but it's definitely a good market, very liquid market. Definitely would want to keep that one always to when things juice up again to as a tradable market. Getting back, let's go and look at where support would be. On the upside, once again, tougher market right now. That upside would have to be 1286. We'll just move that $1 higher. With support coming in right there, 1279. Pretty cut and dry. And let's go to the market of the hour. I'll call it the market of the day yesterday, which was the Bunds. Wow, what a move. And I'll tell you what, there had to have been a lot of carnage because we really, if you look at this overall, a little bit longer term, we really scared some people. You know, one of the things we'd looked at was the 6410. We got above it. It looked like, okay, we're really on our way here, moving higher. And then we turned around and rolled and gave all this back. Okay, now we come back and, okay, we roll back again. And I don't think a lot of people saw this move happening, which was this right here. And I just think it really whipped some people good, but good. And one of the things I was pointing out, because someone was mentioned yesterday in the chat room, oh well, maybe we'll see things that'll turn around. I like, you know what? That's not the modus operandus for Bunds. When it gets going on a breakout move like this, it usually doesn't relent at all, and I mean at all. So we saw this continue to move higher and higher all the way into the close. At the time when we were talking about that, we had just gotten above 65. It was 65.07. I go, hey, new highs. They say, okay, well maybe it's going to turn around. I go, I don't think so. It's not the type of market to do that. That's just not its personality. When it squeezes, it squeezes. Same thing to the downside. It just doesn't let anybody out of jail, and so to speak. So it was relentless all the way. So where's resistance right now? Well, you can see that right there coming in at 65.11. And you look at this bias chart. Look at this. What a rip that was. Looking at the support, I think we have to go into a 30-minute to see if we can find the closest level here. Oh, you can see it coming right there at 78. Yeah, we'll go with that. Although you can make the case a little bit lower here. It actually comes in, good support comes in right there, 64.71. Yeah, it's been such a big move, and the balloons quickly can retrace a move. We'll go with the 64.71 here. Seems a ways away, but I wouldn't be surprised to see us make a beeline for that come on Monday. Let's go to the bonds. Well, we did make it up here to the 23%, or retrace back to that, I should say. Let's go on and we had 45.19. It's going to be right there, 45.26. with support coming right there at 44.30. And let's go into the DAX. Boy, what a move this has been. But they were loving those buns. We mentioned that yesterday when the buns were making that move. I didn't think it was going to be to this extent. Well, we've made it up here to the 78%. Let's go moving to the 2-hour. Right up here to the 78%, right to the pip. So that's going to be our resistance right there, 11,294. And support. It's going to be right there, 11,156. 11,156. You're still trying to hold its own, but remember on the buys chart, we are on a buy mode now. And these momentums, one of the reason, I've been using the exponential moving averages. I had come up with this one, if you want to call it proprietary, but this is what I had found. We would use the 9 and the 27. But one of the reasons I started to incorporate this is because these moves in FX, mainly the majors, would not last. So like I told you before, it's like 3 steps forward, 2 steps back, 1 step forward. I mean, it just wouldn't last. So I found that using the exponential moving average on the 30-minute really helped me. Well, one of the things that kept me in tune with where the momentum was going, how it was changing, because it wouldn't last for very long. And one of the things that, as I mentioned yesterday, kept me from chasing the market was because even though we rallied and the euro was coming back up, we were still in the sell mode when we rallied up here. You see that? We're still in the sell mode. But we've now crossed actually, and it remained in that sell mode, but we've crossed over to the buy mode, so keep that in mind, okay, because momentum has shifted. Although generally, lately, the course is the dollar finishes strong on the week, but we shall see how that plays out. But we're at the top of the hour. Good luck trading. We'll see you in the chat room. I'll get the bias chart posted, and thanks for joining us here on the European Crossover.